My name is Jared Morgan with Bradshaw and Will. I'm an insurance agent and we're here to talk about commercial property insurance. What is commercial property insurance? Commercial property insurance is designed to protect your buildings and contents from catastrophic loss. If your building burns down is a great example. If your building burns down and you have to rebuild it, do you have the money set aside made out of your profits or your assets where you could pay for that? Most businesses would say no. Now you could borrow that money and pay interest on it and have a mortgage on a building for a long time. Or you could purchase insurance on it and fund that loss with a small premium that you pay every year. Generally, the cheapest way to fund catastrophic losses and pay for catastrophic loss is through insurance. Now, when you're talking about property insurance, you're talking about insuring a building, and property insurance has been around for a long time. It can trace its history all the way back really and truly to the Babylonian ages, but our modern insurance market developed through the 19th and 20th centuries. You had companies that designed coverage, and initially it covered just a few things. Wind, when it would cover what we call basic perils, which were listed specifically what was covered. Then as time went by, they expanded that to broad perils, and now in our market today, we have what's called special perils. Special peril property coverage covers everything that's not excluded. For example, some typical exclusions in special peril are war, nuclear loss, earthquake, flood. If a governmental entity comes in and forces you to tear down your building, insects is another example that's typically not covered. So when you purchase insurance, you want to, typically in our market, you purchase special peril coverage, and you want to purchase some extended coverage that will give you some of those items. If you're in an earthquake zone, you need to purchase earthquake coverage. It's not covered by your typical insurance policy. Additionally, if you're in a flood zone, and maybe even if you're not, you may want to purchase some flood coverage. It's not covered by special peril. Some other areas that aren't are backup of sewers and drains, equipment breakdown, ordinance or law where a government comes in and tells you to stop. All those are options that an insurance agent can help you decide if you have the exposure and you need the coverage for that. Now, not only and separate but related to the peril discussion and what you're insuring for, like special peril, the other element that you want to review is whether you're insuring to replace your building and whether you're insuring for actual cash value. So there's two types of insurance. In addition to the peril, there's two types of insurance. One is replacement cost and the other is actual cash value. Actual cash value gives you the actual cash value of your building at the time of loss. So the way they develop that would be, they say that if it costs $1 million to replace this building and it's used up half of its expected life, then we'll give you $500,000 if it's a total loss. Replacement cost comes in and says, if it costs $1 million to replace this building, we're going to pay you $1 million to replace the building. Most people would want to insure for replacement costs. Now the other part of that is you may have had insurance and you may have had a replacement cost estimate on your building 5 or 6 years ago and you may not have looked at it in that time period. Well, if you don't keep those values up to date, you may run into trouble. And if you find at the time of loss that you don't have enough money to replace your building, you may be in a bad spot. My name's Jared Morgan. We've been discussing property insurance.